arise and must be reported during the policy period. So if your claim happens today, you may not know about it for 3 or 4 months before the claim is brought forward. So you have from the time the policy cancels and generally 30 to 60 days later to report that claim. If you find out about that claim a year later, you're going to be out of luck with a claims-made policy because there is a reporting period. So if the claim is not reported during that period, the insurance most likely will not respond, and with a claims-made policy should not respond. So timely notice on a claims-made policy is critical. The minute you think you hear of a claim, then it's time to report it to your carrier, whether or not you think it's going to be anything that's going to come forward. You want to at least put the agent or the company on notice that there is a possible claim. And this refers to professional liability and other types of liability, fidelity, employment practices liability, anything that's written on a claims-made basis. Now, sometimes this is the only way the policy could be written, and maybe the only thing you can purchase. And some of the coverages for Medi-Spas and things like that, most of those policies are written on a claims-made basis, and if there's no other coverage available or if you can't purchase it on an occurrence basis, then a claims-made policy, of course, is the best you can have. So we want to do claims-made, but we want to be real careful with that because if it does expire or cancel, we have to watch the coverage. So the better type to buy, if we can get it, is occurrence form. And the reason is that claims will arise during the policy period. Of course, there has to be coverage in effect when the claim happened or occurred, but it could be reported anytime later, a year later, 2 years later, as long as there's no statute of limitations that would prevent a claim being brought forward. But even if you cancel the policy, you retire, 3 years later a claim is brought forward, then the coverage, as long as the policy was in effect at the time of the claim, would cover it. So obviously this is the better way, the better basis for your coverage because you can retire comfortably with knowing that the policy was in place when you were working, providing those services, and then later if a claim is brought forward, you would have that coverage. And the damage sometimes can span several policy periods if ongoing, so that would be picked up for those type of things. With the claims-made policy, if you wanted to extend that coverage for another year or another 2 years beyond the reporting period, you would have to pay what they call a tail or a prior acts coverage, and sometimes that can be as much as twice the premium that you paid for the policy originally. So occurrence basis is always the way to go. Sometimes it's